Hello friends, in the series on the income tax cases, today we will discuss the case of MAHIMANANDA MISHRA versus Assistant Commissioner of Income Tax. This case has been reported in 455 ITR at page number 449. The matter has been decided by Orissa High Court and the date of the judgment is 10th January 2023. This case is regarding deemed dividend under section 2, clause 22, clause E. Section 2, subsection 22, clause E talks about the loans and advances given to the shareholder who holds 10% or more shareholding in a company. If a company gives loan to a shareholder, whether he is director of the company or not, and if that shareholder holds 10% shareholding of that company, then that loan will be treated as a deemed dividend in the hands of the shareholder. Section 2, clause 22, clause E has extended provision also. In the plain language, if a shareholder is holding 10% shareholding in the company and has substantial interest, the definition of substantial interest is 20%. In another concern, like in a private limited company or in a partnership firm, and if the loan is given by the first company in which the shareholder was holding 10% shareholding, if that company gives loan to the partnership firm in which the assessee has substantial interest, then the amount of loan will be treated as a deemed dividend in the hands of the shareholder. Friends, at the face this provision seems to be very easy to apply. But my point is that if the assessment of the shareholder is going on, then how the assessing officer will come to know that the private limited company has given a loan to a partnership firm in which the shareholder has a substantial interest. So this provision is very difficult to apply for the assessing officer. If this provision has been like that the amount of deemed dividend will be taxable in the hands of the firm, then it is easy to apply, because when the assessing officer will be doing the assessment of partnership firm, then he will be came to know that the partnership firm has received the loan. This was the fact of this case. In this case, the partnership firm has received the loan from the private limited company and the common link was shareholder. So the assessing officer taxed the amount of the loan in the hands of the firm. But the assessee was contesting the case that the amount is taxable in the hands of the shareholder and not in the hands of the assessee firm. In this case, the firm was the assessee. But the assessing officer taxed the deemed dividend in the hands of the partnership firm. The assessee went to the CIT appeal. CIT appeal gave relief to the assessee by saying that since the shareholder is the beneficial owner of the shares, so the amount should be taxed in the hands of the shareholder and not the firm. The department moved to the ITAT. ITAT remanded the matter back to the CIT appeal to confirm whether this amount should be taxable in the hands of the shareholder or the partnership firm. The assessee moved about to the High Court about this remand back, and the High Court said that in this case there was no need on the part of the ITAT to remand the matter back to the CIT appeal. There is no doubt that the amount of loan given by the private limited company to the partnership firm in which the shareholder is holding substantial share in the partnership firm, and any amount is given as a loan to the firm by the private limited company, then in that case that amount will be taxable in the hands of the shareholder and not the partnership firm. Friends, in this case, because the court gave the decision in favor of the assessee firm, so in this case the department was losing the revenue, because the provision is like that, because the department was assessing the firm and not the shareholder. And it may happen that up to that time, even the time of reopening the case of the shareholder has expired. So in this case, the department is the loser, but the provision is like that. The section 2 subsection 22 clause E is very clear that the amount should be taxed in the hands of the shareholder and not in the hands of the firm who has received the loan. At the end of this video, once again I am repeating the name of the case. The name of the case is MAHIMANANDA MISHRA versus Assistant Commissioner of Income Tax, and this case has been reported in 455 ITR at page number 449. The matter has been decided by Orissa High Court and the date of the judgment is 10th January 2023.